Welcome to Morningstar. Gold has in recent weeks been making new all-time highs, and here with me to discuss the drivers behind the rally and which fund managers have benefited is Senior Manager Research Analyst Thomas De Fauw. Now, gold typically does well when there's increased risk of geopolitical risk and everything. Is that the main driver behind the recent uptrend, Thomas?
Certainly a factor, alongside with US dollar weakness earlier this year, expectations of rate cuts by central banks. There's also been some global concerns around the debt levels in many of the developed market economies, and perhaps even an appetite among Chinese retail investors that are looking to diversify away from real estate. But back to the geopolitics. Of course, there's always been conflict, and between 2012 and 2018, gold hasn't gone anywhere. So I think it's important to look at the consequences of these conflicts. For example, investors are very familiar with the effect of conflict in the Middle East on oil prices. Well, if you look at the Ukraine war, there's been other behavior that's been important here. Noticeably among central banks. So as part of the Western sanctions, the US has kind of weaponized its currency against Russia by freezing the dollar reserves abroad from Russia. And this has, triggered a rethink among more emerging market central banks that typically hold a lot of US dollars as reserves. So they turn to gold a little bit more for diversification. So the dollar still dominates those balance sheets, but by buying a little bit of gold and diversifying away from the US dollar, that has actually supported the gold price quite a bit.
Okay. And now how about retail investors? Are they also participating in this rally that we have seen?
Not really. And I'm glad you bring this up because it's an important point. We've seen fairly little interest from retail investors when we look at, for example, the flows to ETFs. Also, gold mining stocks have performed quite poorly. So all things considered, this rally has puzzled many investors, and some are doubting whether it's sustainable. Interesting, after the US election, we've also seen the market or gold prices come down a little bit.
Okay, and then turning to professional investors, what are fund managers doing regarding gold?
Well, many investors don't invest in gold. There's the classic arguments, gold doesn't generate any cash flow. It's quite a volatile asset. And in the meantime, there's higher bond coupons available in the market. Of course, there's other investors that have different opinions about the precious metal. They see it as a good equity hedge. It's been proven its worth during the global financial crisis and more recently in 2022. But also on other occasions, it's been a good store of value against inflation and currency displacement, according to those investors.
Now, as a fund analyst, you cover multi-asset funds in Europe. And can you tell us, are there any fund managers out there that have an allocation to gold in their portfolio?
Certainly. So there are those that see it as tactical trades. We know several funds that hold 2 to 3% allocation to gold. But there's also those others that see it as a strategic asset allocation, a core building block, if you like. A good example is the team at DWS, the total return team there, led by Klaus Kaldemorgen and Christoph Schmidt. They've had a steady 7 to 8% allocation to gold, which they see as a risk currency, much like the US dollar. And they also see it as one of the best geopolitical hedges out there. Another fund is Flossbach von Stork Multi-Opportunities. It was launched in October 2007, and it holds over 10% in gold. Like DWS concept Kaldemorgen, equities dominate this portfolio, but there's also a role for bonds, convertible bonds, and gold. And a lot of leeway to adjust those allocations. So, for example, in March 2020, the equity allocation there was 29%. The following year, it went up to 82%. Now, back to gold. So there's a maximum allocation of 25% of the assets into gold, but we've seen that typically it has been ranging around 10, 12, 13%. And the team there sees gold as an insurance rather than an asset that is generating returns.
Okay, Thomas, thank you very much for your insight in what is happening in the gold market at the moment. Thank you all for watching. For Morningstar, I'm Robert van den Oever.